What's going on, you guys? Welcome back, and in this video I'm going to be going over both Starbucks and Intel and their last earnings reports and exactly what was my overall opinion of these earnings reports and if they affected my overall investment strategy in either one of these companies and how I think that these companies are going to continue to perform over the long term. But before I get in the video, I did kind of want to give you guys a little bit more of an update on my personal life. So as you guys know, I just started college. I just finished my first week, and I also just started my new IT job at the university. So altogether, I've been either in class or working at the university for 60 hours so far this week. So I'm a bit spent, and I definitely don't have enough time to really pump out as much content as I was over the summer. But I also kind of wanted to introduce something that I was thinking about, and I think you guys will benefit from greatly as you watch my channel. I plan on pretty much taking the time to really document everything that I'm learning this semester and from previous semesters, compiling that into either PowerPoints or surveys or spreadsheets or anything like that. And I'm going to try to embody all of the academic knowledge that I've gained over the past couple of years in my finance curriculum, and I'm going to put that here on YouTube so that way all of you guys can have access to essentially university level finance teachings for free, and I can kind of walk you guys through it and answer any of your questions, because I know a lot of you guys are really interested in finance or really interested in investing, but none of you really want to, just go off and dedicate, $100,000 plus to go to a university, get a 4-year degree, all that. That's not really what you're investing for. A lot of you guys invest for a side gig. You're not like me and want to become a portfolio manager for your real-time job. So I figured I can put as much of that information out here on public, and so that way hopefully you guys get some more benefit out of my channel, and hopefully you guys can also open your eyes to what exactly is the whole financial realm that you're stepping into when you decide to be an individual stock picker. Now, I got this idea because I realized that a couple of my finance professors are either currently or have been portfolio managers, and one of them that I'm actually studying under right now has been invited to lunch multiple times by the Warren Buffett. He has been able to take classes to Warren Buffett. Warren Buffett selects about 4 universities every year, and that he sits down, has dinner with them, and they talk, they answer questions and things like that, and you just kind of get to hang out with Warren Buffett for the day. And my professor has such a well-known presence in the financial community that he's been invited multiple times over the past couple of years to kind of attend this, even though I don't really go to a prestigious university. So the other universities that generally get called upon are like Harvard, Yale, Stanford, Princeton, things like that. But my university, which is a state university, has been able to, go to these lunches and these dinners because of how important this professor is. So I'm going to attempt to pick his brain as much as possible on his overall opinion of economics and his investment style, and I'm going to attempt to embody all of that here on YouTube so that you guys can learn from someone that has much more experience and much more success in the stock market than I have over just the past couple of years, and really just kind of give that to you guys as a way to kind of give you guys more value here on the channel. So if you guys are interested in that, make sure to let me know in the comment section down below. And if you have any individual questions you kind of want me to work in to my conversations with him, make sure to let me know in the comment section down below. So now that the really long intro is over, let's get into the 2 companies that just came out with earnings reports. So the first company I wanted to talk about is Intel. So Intel just came out with their earnings report, and the stock price tanked because of it. The stock price was down at one point, I think around 7% off of its previous close. And so just running down the list, Intel, they had their revenue up 9% year over year, and their EPS was up about 18% year over year. And now their numbers, in essence, from this quarter weren't bad. They were relatively good. They missed on the top line, but they beat on the bottom line. And so investors were kind of whatever about the actual fundamentals that they came out with. However, the thing that really made the stock price tank was the fact that Intel gave relatively weak guidance. And now this is something that does not come to a shock to me at all. And I actually talked about it in the video I just did about Intel. If you haven't started a position in it, more than likely it could tank because of this, because in my opinion, the overall growth in all the economies are slowing down, and semiconductors are going to get hit first and the most hard because of that. And so I'm not really surprised by this, and I don't think anybody that's really been following the semiconductor space is that surprised that they are having relatively low guidance for Q1 of next year. So the main reason why Intel's stock price took a dip was because of their weak guidance for Q1. Now, this week guidance, I don't think is that surprising to anybody that really follows the semi space. I've talked about it here. I've talked about it in just about every single update on any semiconductor stock that I've had in the past couple of weeks. And that is essentially that when economic growth is slowing down, until that starts to invert, semiconductor growth and semiconductor sales and earnings and everything like that are going to dip very quickly, and they're going to dip a lot steeper than the overall market. And that's largely due to the fact that if, economies are not growing, companies start to really cut on, their technology increases and, their technology spending. And if you don't really have a lot of money going into technology, you don't have a lot of money going into data centers, as we found out from Intel, and they're not expecting that to really reverse by the end of next quarter. And I think that this is something that's actually pretty interesting, and it's going to tie directly into Micron. I've made a couple of posts about it on my Instagram account. If you guys haven't checked that out, make sure to follow me at Millennial Investing 101. I'll put a link to it down in the comment section down below. But essentially what happened, and it was kind of interesting, is that the day before Intel came out with earnings, a couple of analysts were saying that, okay, DRAM is going to invert, and, Micron is going to be able to make a lot of money this year, and, kind of the worst was behind us. And the stock price is up off of its book value almost 35%. And in my opinion, when you have the news that came out of Intel saying that, okay, data center growth is going to be slow for next year, or at least for the next couple of quarters, and then people are dumping money into Micron, and Micron was up again about 8% today, that's a little bit of a red flag, because something just doesn't add up, in my opinion, because you essentially have Intel, which is supplying the majority, 90+% of all data center CPUs. And so anytime that you make a new data center, more than likely you're going to be supplied by Intel for the CPU. And unless those data centers are really starting to, pick up in volume, Micron isn't going to have a large increase in its revenue or an increase in its overall sales. And the fact that Micron's stock price continues to go up even after these lukewarm earnings from Intel raises a lot of questions to me personally, and I'm actually thinking about cutting my, the book value position that I just started with Micron. It's already up 35% in just a couple of weeks. And I'm thinking that, right now gaining 35% of my money on something that doesn't really look like it's going to be changing right now, I think I might take it and re-enter again if it approaches that book value. I'll let you guys know if I end up doing that, but that is an action that I'm thinking about taking in the future. Another big thing to think about is that Intel did not replace their CEO yet. They're still looking for a CEO, and that is something that was another big letdown to many investors, myself included, was the fact that, Intel is kind of being flown by no one right now. Their CFO is their interim CEO, but he's not really attempting to lead the company to really do anything. So I think the company is just going to be operational for the short term. There's not going to really be any new visionaries stepping in, taking the company in a new direction. And so until that really starts to change, I don't think there's going to be any huge innovation coming out of Intel. But essentially, from Intel's earnings, I'm not really too keen on the, the short-term future of the entire semiconductor segment. You guys all know that I am very bullish on semiconductors, whether it be Intel, Nvidia, Micron, AMD, whatever. I'm really bullish on this space over the long period of time, because I think that the way that technology is going and the way that economies are going and being more and more technology reliant, semiconductors are going to be booming, for the next couple of decades, no questions asked. However, I do still think that we are in the slowdown period, and I do think it's going to be a while now, and especially based off of what Intel came out with. It might even be longer than I originally anticipated for this trend to really start to reverse. So I'm not too bullish, let's say, on the semiconductor space over the next couple of months. Now, so switching over to Starbucks. Starbucks was kind of the polar opposite of what happened with Intel. So Intel came out with, relatively lukewarm numbers, and their guidance was kind of whatever. Starbucks, on the other hand, beat on both top and bottom line, and they had amazing same-store sales growth in the U.S. They had about 4% year-over-year growth. So when you look at, the U.S. being a relatively mature market, for Starbucks to be able to get 4% growth in all of those comparable sales, that is actually really impressive in my opinion. However, I'm not extremely impressed with this earnings report, because China's same-store sale growth year-over-year was roughly 1%. So, when you break down all the numbers, and their growth overall in China is still growing because they're opening new stores. But when you compare them store to store and, just kind of how the stores that are already existing in China are doing, it's still kind of flat, in my opinion. A couple of quarters ago was growing at, a 6 to 8% clip in China, and then it was negative, and now it's just kind of sitting around 1%. I'm not too excited with what's going on, and Starbucks is also kind of worried about the future, in the short term with China, with a lot of market fluctuations in China, and they're not really expecting to see China to really start growing again, at least for the short term. So personally, I have the contrarian view to what the overall market had. So Starbucks was up off of these earnings reports. But to me, this is kind of, not something to really be happy about. Yes, they had a good earnings. I'm not going to be taking that away from them. But they didn't really point to the fact that growth is going to be right around the corner, or the fact that China is going to continue to mature at the rate that they expected. Now, I definitely don't think that the company is going in the wrong direction. However, I do think that the company is getting charged more and more as a premium right now. And I don't think it deserves a premium just yet, based off of their, what they have had on their fundamentals or what they're expecting to have on their fundamentals. Right now, Starbucks trading at about a PE of 20. I'm not too keen on paying, for a stock price, the PE of 20 when their growth is still relatively dismal. So I'm personally still holding off on adding any more Starbucks, and I'm pretty much waiting for Starbucks to really kind of show a trend in the positive direction in China. And also looking at Starbucks' income statement, you kind of see exactly why I think China is such an important factor when you look at Starbucks, because you have America, which is realistically a very mature and very saturated market for Starbucks, making up about $4 billion of the company's revenue. And then you have China, which is a feasibly untapped market that, Starbucks still has years and years and years of growth ahead of it to really, kind of saturate that market. And it's coming in at only $1.1 billion. So you can see that as fact that, okay, China is making Starbucks significantly less money. So the fact that they were able to squeeze out another 4% of America is huge for the company because that's way more profitable for them. But in a long-term perspective viewpoint, Starbucks really needs to execute very well in China if the company ever expects to really kind of go past what it's already been over the past 10 years. If China is able to become as profitable as America is, you essentially can double the company. And so you can essentially double the company assuming China catches up to the Americas as far as the amount of revenue that Starbucks is getting from it. But with China, you also have, roughly 3 times the amount of people in China than you have in America. So in my opinion, if Starbucks can prove that the current stores in China can become as profitable as the current stores in America, and then you expand that, say another 5-10 years from there, you essentially have a company that can almost quadruple based off of the fact of how well it can execute in China. So to me, that still is kind of the rule of thumb when I invest in Starbucks. I am still only really focused on, for right now, how they're doing in China. And right now, they're not really executing as well as I want them to be. And, whether or not that changes over the next couple of quarters, who knows? But to me, essentially, how well Starbucks executes in China is going to be how bullish I am on the company over the next couple of years. Now, I definitely think that Starbucks is going to be an amazing company, regardless of what happens in China. However, I do think that if you expect any large growth out of this company, you really need to be paying attention to how China is performing and how the company is, positioning themselves in the Chinese economy. I definitely think that Starbucks is going in the right direction. However, it's going to be taking a lot of quarters, and a lot of growing pains to really, figure out, okay, does Starbucks have, legs to stand on in China, or is it just going to kind of fall by the wayside, 5-10 years from now? So in essence, from this earnings report, I am relatively lackluster on Starbucks currently. If the next quarter comes out and they are able to grow China at, about a 3 to a 4% clip again, I will be much, much more bullish on the company. But until that point in time, I am actually less bullish on the company than I was, in the short term, obviously. Long term, I still have, really high hopes for the company. But for right now, I'm kind of not impressed as an investor, and I'm not going to be really adding into my position until, things in China really start to turn around. So that's kind of my takeaway. I don't know if this was just kind of a ramble and kind of a high level thing. I just wanted to give you guys some content, and, if you guys have any opinions or on either one of these companies or any of the companies that came out with earnings reports, make sure to let me know in the comment section down below. And if you have any other individual questions to ask that I didn't get to here in this video, make sure to let me know in the comment section down below. Because again, this was just a high level overview of my thoughts after reading their earnings reports. So thank you guys for watching. Hope you guys got some use out of this. And again, let me know if what I talked about at the beginning of the video is anything that you'd like to see in the future. Thanks again for watching. Peace.